Hello, John Flynn from Flynn Real Estate, serving Southern Ontario, based in the Niagara region, here again to give you my honest and professional opinion about the 2022 Canadian housing market. This week I'm going to get into, of course, the price declines, the continuing price declines, I should say. I'm also going to pick up where I left off last week with the areas I missed, Vancouver, Quebec, and Nova Scotia, to see how those markets are doing, and a little bit of news that I wanted to touch on also. First off, take a good look at these rates. Probably the last time you'll see them for a while. The Bank of Canada is coming out with their announcement tomorrow. We've had speculation on what it could be. Looks like a 75 basis point, 0.75% interest rate hike. So we will see where that goes. It will be very interesting, that's for sure. So Vancouver released their stats after I did my last video, so I'm touching on them now. And this is from the Real Estate Board of Greater Vancouver, and I'm covering all of Metro Vancouver. And of course, they sum it up with home listings up, sales down, and prices starting to decrease. And you can see the sales are down 35% year over year. And again, I'm going to criticize because they're using a benchmark price, a home price index or a benchmark price, whatever that is. Like you and me, we probably are familiar with median and average price points. So I just wanted to compare them. And in their report, they talk about a 12.4% increase over June 2021. So year over year, doesn't really tell us much about what's happening now. And a 2% decrease compared to May 2022, and a 2.2% decrease over the last 3 months, or the past 3 months. So let's put that into perspective with some averages in median prices. So you can see here from their historical average price chart, they're at just under 2.1 million now, and it's down 9.2% from the April high. In April, it was 2,311,000 approximately. And this is for single family detached. And here was their MLS sales facts that they put out. So of course, on the detached, we were down 5.8% month over month from May to June. From the attached, 4% down, and the condos or apartments were 3.3%. And this is for all areas in Metro Vancouver. Moving on to Quebec, brought to us by the Quebec Professional Association of Real Estate Brokers, and they sum up their monthly news release with strong transactional activity in the market despite the slowdown, and prices continue to rise sharply in regional areas. And here are their basic stats. Sales are down in all three types of properties, 13 to 17% decline over last year, and they're doing it from Q2 to Q2 this year, so Q2 2021 to Q2 2022. Median prices are up year over year, and active listings are down. So they still have a little bit of an inventory issue, but there are less sales than there were. So, and I just summarized it in a chart to make it easier to gauge. This is for single family homes. You can see that they did peak in April, May, and we're starting to see a decline in prices now. It looks like they're a few months behind Ontario, and other areas are similar in that respect. And here's the condos, which have remained fairly consistent since the peak, and we'll see what happens to those in the coming months. Now on to Halifax, brought to us by Andrew Perkins real estate team with Keller Williams, I believe. And he puts out a monthly report, and this is where I get my information from. So in Halifax, he says, inventory continues to climb in Halifax. This is great news for buyers. More inventory means less bidding wars, less competition, and more options when searching for a property. Prices continue to rise in both single-family homes and condos. This may begin to level out in the coming months with more inventory coming on market, but we do not expect it to dip much. Halifax is still on the lower end price-wise in comparison to the rest of Canada. And of course, I compiled his data from his monthly releases, and you can see that, yeah, it seems to be holding steady at the peak around 600,000 for single-family homes. But the condos look like it has eased off a bit, and it could be just the amount of data that we had. It could have been a slower month for condo sales, or it could have just been the condos were selling at a lower price point. Okay, now on to the big one. The houses dropping, home prices dropping 10,000 per week on average in Ontario. I had to put this into perspective because It's okay month to month, we're down 100,000 in 1 month in certain areas. But I did an average and I averaged it out, putting it into perspective. $10,000 a week prices have gone down. And of course they went up almost $10,000 a week, prior to this. And if you look at daily, it's $1,400 to $1,500 a day home prices are dropping. Pretty significant. So you're sitting there, you have an investment, maybe it's your own house, just take that into consideration. They are losing at this point in time. It won't last forever, but I believe it will still last for the rest of the summer, if not longer. And we will reach that 30 to 50% overall decline from the peak, right? So here is a chart from the beginning of March or the end of February, the peak, to now, the second week of July, 19-week period, we've dropped $10,300 per week. And this is Ontario, everything excluding GTA, or most places I should say excluding GTA. And you see an equal time period prior to that, from the middle of October to the end of February, we increased $8,900 a week for that 19-week period. So again, a little bit of perspective, right? And I'm going to compare that. Let's compare that to the run up to 2008. So in the run up to 2008, in the same area, Ontario excluding GTA, we were at $13,000 per year increase in the average house price. This is per year, which equates to $105 per week increase in value up to 2007. 2008, the prices were actually lower. So I did all of the growth up to 2008. $13,000 per year compared with $8,900 per week in the lead up to where we are, or $10,000 per week loss. That's insane, right? I wanted to put some perspective into this so you can kind of see how insane our market is compared to then. I used a 7-year run-up period to 2008. I'm going to use the 7-year run-up period to now, to 2022. So the top, the green line, and the green is the 7 years right to now. So now we've already had some losses this year. So this is from July 2015 to mid-July 2022, 7-year period. $77,900 per year increase in the average house price. And again, remember, run up to 2008 was $13,000 per year, or $1,616 a week now, compared to $105 a year in 2007, I guess, run up to 2008. And if you want to compare from the peak back 7 years, so the February 2015 to the peak 2022, $89,000 or almost $90,000 per year increased values, or $710 per week. And again, compare that with the run up to 2008, $105 per week, or $13,000 per year. So pretty significant. And I just want to bring that graph back up again, because it's shocking actually. So your house right now, your average house in Ontario is losing $10,000 per week, and it's not stopping right now. It's going to keep going, like I said, for 2-3 months at least, and that's what they're dropping. So keep that into consideration when you're thinking about making a decision, buying or selling. I have people call me all the time about, should I buy? Is it time? Well, if you like losing $10,000 per week, buy a house. If not, I would wait. Lastly, I just want to end with a news article from the Globe and Mail on CMHC, just to show you kind of the history and some of their faults that they've had, that when they make predictions, they're not always perfect. Just like I make predictions, I'm not perfect, but I'm going with current data, not year over year. Their problem is, I don't know what their problem is actually, but let's see what they have to say. CMHC revises down home price forecast over next 2 years to adjust for interest rate spike. Canada Mortgage and Housing Corp, which was criticized in 2020 for sticking to a pessimistic outlook for housing prices early in the pandemic, is revising its forecast because the Bank of Canada will likely continue to hike its benchmark interest rate aggressively to slow runaway inflation, which makes it harder for residents to afford a mortgage. The federal agency revised down the percentage gain it expects from 2021 to 2022, with the average price now forecast to climb 11% instead of 13.7%. The forecast is for the full year, and it includes the first quarter when home prices peaked. So they've gone down from a 13.7% year-over-year increase in 2022 to an 11% year-over-year increase. I think it's going to be more than that. I think that by the end of the year, our prices will be, our average price for 2022 will be 5% year over year or zero. But I don't think it'll be any more than a 5% year over year. Although home prices have plummeted since the central bank started raising interest rates in March, CMHC chief economist Bob Duggan says he was leery of forecasting a steeper price decline when the housing shortage is so severe. So house prices have plummeted, but he's leery because of the housing shortage. But our supply is increasing and our sales are decreasing. So the supply isn't really an issue. And again, look at my old videos. You're going to see supply skyrocket, and it's already starting to skyrocket. But Mr. Duggan, the economist, after house prices have plummeted, thinks the supply is still going to be an issue. So we'll see what happens, but I don't think it is. He goes on to say, I have trouble believing a very big price correction, said Mr. Duggan, or Mr. Duggan said. I don't want to say that it can't happen. It is possible for a 10% price correction like some people are saying, but I'm just leery of that because the supply shortage, he said. So we've had a 12.9% last time I checked, that was May's stats, through all of Canada from the peak, and he's talking year over year. So he's saying a 10% price correction is possible, but it probably won't happen. So a 10% price year over year, if that happened, we would be down, I'm going to estimate about 40% from the peak, maybe 45%. So he's saying he doesn't think that's going to happen, but he won't say it won't happen. Mr. Duggan said CMHC has learned from its mistake in May 2020, when the agency predicted the average selling price of a home could fall between 9% and 18% in the worst case scenario. The agency issued the forecast shortly after the government lockdowns had hit sales and prices. Yet even after the residential real estate market quickly recovered and home prices accelerated, CMHC stuck to its forecast. We knew that the forecast was wrong. We should have come out sooner, Mr. Duggan said. I'm not afraid to admit that. And so you learn from your mistakes, and so that's what we're trying to do here. CMHC sees the average home price bottoming out in the second quarter of next year and then gradually rebounding over the latter half of 23 and 24. It predicts the average home price will fully recover at the end of 2024 and surpass this year's peak by 2025. So I'll give him credit. He came out, he admitted he was wrong. Not a lot of people do that. And it's tough, right? Especially when you're dealing with huge markets like this and of course the Canadian real estate market. So kudos to him, great job. Now for my criticism. So he was wrong when they said that they were going to decline up to 18% or whatever he said at the beginning of the pandemic. So he was clearly wrong, he admitted it. Now he's going the opposite way and he's saying they're not going to decline as much as you think and they're going to rebound by 2025. So I think he's going to be wrong again. I don't see prices rebounding to their current peak levels this year by 2025. I just don't see it. Unless interest rates go to zero again, like real soon, it's not going to happen. So anyway, this is what he thinks. And he's an economist. And the economist theory has gotten some criticism lately. They're based off principles and theories, not off current market conditions. And there was a good article on it. I think it was in the National Post. I'll try to link it in the description if you want to check it out. But it had some merit to it, and it was very interesting to hear the theories about why the economists running the Bank of Canada is not a good thing. That is for this week. Next week's going to be pretty exciting. We're going to have the CREA stats out, and of course the big interest rate hike this week, or not. Maybe there won't be a hike, but I think there will be. So thanks again for watching. Until next week, I'll see you then.